financial market, understanding stock return is crucial for making informed investment decisions. However, knowing just the average return of a stock isn't enough. It's also important to understand how reliable that average is.
First, what is confidence interval? A confidence interval gives us a range where we believe the true average return lies based on the historical data. As we can see, here's the example. The 95 confidence interval for TSLA average daily return is between 0.00224 and 0.00768 means. We are 95 confident that the true average daily return is somewhere between negative 0.224% and plus 0.768%. Here is the scenario. Let's say you're an investor considering buying share of a company like Tesla. You follow the daily return data for the past year. You calculate the average daily return, but how do you know if this return is dependable or just due to the random mark fluctuations? That's where confidence interval comes in. In this tutorial, we explore how to estimate the confidence interval for the average daily return of a stock using historical data. This statistical approach allows investors to quantify uncertainty and gain deeper insight into the stock performance over time. Let's break down the solution step by step with the code and explanation and the result, including both the confidence interval histogram and the rolling mean plot. The first step, we need to download historical stock data. We're pitching Tesla stock data for the year 2024 finance, give the adjusted close prices in the close column. For the second step, we need to calculate daily returns as the percentage change from the previous days. As we can see, here's the calculator or the daily returns. This is show the percentage gain loss in each days of the code. And next, we need to compute the confidence interval 95%. As we can see, here is the code of 95% of interval. And next, we're 95 confident that the true average of daily return of TSL during 2024 lies between 0.224% and 0.768%. For the next step, we need to visualize the distribution with confidence interval. As you can see, here is the histogram. That green line shows the sample mean, the red dashed line are the 95% of CI bounds. And for the last step is the code of the rolling mean. This gives a smooth view of how daily return are trend over the time using a 20 days moving average. This helps spot trends, volatility shifts, or sustained changes in stock performance. Here is the conclusion. The average of TSLA daily return in 2024 was between negative 0.224% and 0.768% with 95% confidence. The histogram shows the return distribution and confirms the TSLA's return are centered around the small positive mean. The rolling average gives a visual insight into how return fluctuates across the time.